Good morning. Oh, oh shit! What happened here? Give me 1 second, Miguel. Something wrong with the system. Give me 1 second. Oh, what's wrong with this?
I see your background fine.
Let's see now. All right. Can you hear me now, Miguel?
Yep.
All right. Sorry about the little technical issue. And we started with something that happened on Friday when the markets were all closed, which is we had the labor report. Very interesting. It sounds like a slow motion, right, Miguel?
Yeah, you're lagging a little bit. You're lagging a little bit. Are you having trouble hearing me?
No, I hear you perfect, but I had a problem yesterday. I don't know what's wrong. Oops.
Yeah, it looks like a connection issue.
No, it's not a connection issue.
Yeah, well, your audio is coming in good, so that's good.
Yeah. Okay. Wow. So the image is kind of slow motion.
Oh, it's probably a processing issue, like your computer. I actually, Luis showed me a setting that might help you. We can talk about it later.
In the computer?
Yeah, in OBS actually, because OBS, unless you tell it to, it processes the image using software, which is kind of like a roundabout way. But if you tell it to use the hardware of the computer, it does it more easily.
Okay.
But we can get into that later.
Let me tell you, the last 24 hours has been quite challenging. I have so many problems with technology. Okay, sorry guys, give me 1 second. Quite a challenge. Okay. Shit. What's wrong with this whole thing? All right. Okay. So, Miguel, as we were saying, the big thing was the employment report that came on Friday when the markets were closed. And here it is, the report. We have the market was expecting 660. The actual number was 916. And despite closing on record markets on Thursday, we had record still today. Looks like the pre-opening. So the market now thinks that the Fed might even raise rates at the end of next year. Although some people were talking 2023, now the market is saying it will happen sometime in the second half of 2022. I don't know what you have any particular.
Well, I think that's sort of the new game, and that's the new discounting method for equities, right? It started when it started, I'd say in the last month of the recent Fed meetings and presentations from Mr. Powell, where they started saying that the Fed's looking to raise rates not before 2023, not before 2022. So that's the new discount method, and we're going to see this move. The expectations are going to move in the sort of strategist reports and the analyst reports about when they're going to raise rates, and that's going to reflect, the outlook. That's it. I think we're going to see many changes in thoughts on timeline on rate raises over the next 6 months for sure.
All right, so that's good. Good to hear. Okay, let's go into the second chart of the day, which is something that we've been talking about. This is, Brazil exports in millions of dollars. The blue line, look at this, very interesting. As we've been saying, the commodity prices are being felt. I mean, probably the volumes have not changed, but with the rate, in particular case of Brazil, is the grain business, wheat, corn, and particularly soybeans. And then you have other things like iron ore. So look at the big number, big jump for the first couple of months of Brazil. And also could be like, probably, I don't know, this is only dollars, so we don't know if the volumes have changed, but we assume that the volumes kind of stay where they are, maybe a little bit better, but definitely better prices. So it's very interesting, a big jump in numbers there. All right. So Remember that Europe is closed today, Miguel. Most of Europe, almost all of Europe is closed today, and also Asia was closed. I didn't know that they extended Easter, Hong Kong, China were closed on Monday. As I didn't know that. As we got into the historical maximums, here it is volatility. Volatility is coming down. No surprise. That was April of last year. A year later, we are, slowly coming down. So again, interesting. Goldman Sachs, they quit their short on the dollar. Remember, they were saying 125 on the yen for 125 in the euro. I'm sorry, for soon enough, and now we're at 117. They call it a tactical retreat. Any comments, Miguel? You have comments there.
Yeah, I mean, this is something I started talking about, probably a month ago when we saw the dollar rally quite a bit. It was coinciding with the rotation in the equity side, but kind of my view was there's still a lot of demand for risk. There's a lot of demand for U.S. assets. That's very clear. There's really strong inflows. And we're watching also the treasury auctions that people were a little bit worried about, and the demand was super strong and they went off perfectly. So my view is like, in this volatile market, people looking for value, people watching out for the rotation, I think there's going to be so much demand for US assets that it's probably going to provide some kind of bookend or stop back to the dollar short. And so I think it makes a lot of sense. And another point is, and this is worth actually looking into with a little more detail, but I was also thinking on the retail side, a lot of access to retail investing and to crypto comes through the dollar and through US platforms. So that's
yeah, very good point. The dollar, the crypto gets bought in dollars. Very good point. It doesn't trade in euros. Maybe it does, but not huge. That's a very good point. All right. Yeah. Lastly, the IMF spring meeting starts this week. Is virtual meeting, and one of the things that actually I think on the G20 is also midweek is that Janet Yellen is calling for a global corporate tax for everybody, for the big corporations. I don't know if it's going to fly. Most experts say it's like dead on the water. It's not happening. I tend to agree.
I mean, how can you enforce it?
I don't think it's going to happen. All right. Sorry for the technical issues. Miguel, send me that stuff because I see that my computer is very slow or something.
Okay.
It's not going well. All right. All the best. Take care.